Investing is already complicated enough. Add on top of it the conflict of interest. There are influencers that are compromised that say that their favorite token will do a 100x. Then there are the Bitcoin maximalists that will say that Bitcoin goes to $1 million tomorrow. Then there are the naysayers, the people that say that Bitcoin will hit zero because it's worth nothing. But what is actually realistic? Now, this is the Bitcoin strategy channel, so obviously I have a positive bias towards Bitcoin. But in this video, I want to paint the worst case scenario. I do not think that the worst case scenario is zero in Bitcoin, but I do believe it's worse than most people expect. The vast majority believes that the time frame for a Bitcoin investment should be at minimum 3 to 4 years, because historically Bitcoin always recovered after a bear market within that time frame. What we've got over here is the Bitcoin price in black and the realized price. That's the average cost basis of the market. So that's a nice thing about cryptocurrency. We can actually have a look at every individual Bitcoin and see at what price did it move the last time. Thus we know, is the market currently in aggregate in losses? So do we have unrealized losses everywhere, or is the market currently in profit? Whenever we are at the end of a bear market, we tend to go below that realized price. And so one potential way to derive the worst case is to take that as a reference point. The realized price is currently close to $56,000. Now that doesn't mean that we can't fall below that, because again, if history is any indication, we did go below it. Here at the end of 2018, the realized price was at $5,000, yet we went all the way down to $3,200. So that's 36% below the realized price. Well, let's have a look at the drop after FTX. The realized price was at $23,000, yet we went down to $15,700, which is 32% below the realized price. So if we take a similar comparison again, roughly a third below 56K, then we have a bottom of 44K in Bitcoin. So that would be the potential risk, not zero in Bitcoin, but 44K in Bitcoin. Again, we're trying to find out the worst case now. We are not yet done with the video though, because unfortunately I do think the situation could even become worse than that. The realized price simply shows the average cost basis of the entire market, but we've also got the long-term holder realized price. So now we just look at a subset of the market, and at the end of a bear market we also went below that price. Now that's currently at 37K, and again we did fall below that price in the past, roughly 30% over here and roughly 20% over here. So let's work with 25% below that long-term holder realized price. That brings us to a worst case for Bitcoin's price of 28K. Now I understand how this can be completely unimaginable right now, but nobody thought that we'd go all the way down to 16K when we were close to 70K in Bitcoin. So there's quite a lot of volatility in the market if systemic shocks hit the system. There's a good case to be made that we aren't really that cheap historically. This is an aggregate index. I like it quite a bit. It's the CBBI, to be found at cbbi.info. It looks at various indicators. The market value to realized value z-score, so that looks at the current profit relative to the realized price, relative to the volatility. We've got moving average indicators. We've got trading activity indicators. We've got realized and unrealized profit. There's all kinds of indicators that used to work pretty well in the past, and currently we are not hyper low on this metric. My real concern isn't even that we hit 44K in Bitcoin or that we go all the way down to 28K. My concern is that we fall even lower than that, and that could shatter the confidence of even the hardest of the Bitcoin maximalists. Let me show you the potential case. Now, here is the issue. At the top, we see the Bitcoin price. At the bottom, we see the Nasdaq 100. So technology stocks. We can see how the bottoms align pretty well. This was the COVID crash. So Bitcoin sold off during the COVID crash. by more than 50%. Subsequently, we had our rally, and again, Bitcoin and tech stocks topped out at the same time. We've got again a bottoming out that aligned very well. And even those smaller dips here, right, those buying opportunities, when tech stocks went down, Bitcoin went down as well, and they recovered at the same time. So clearly, Bitcoin is currently traded as a risk-on asset. It's not traded like gold, it's rather traded like a very risky technology stock. Is that justified? Who knows, right? But we just have to look at how the market is reacting. Just because we think that Bitcoin is the hardest of the monies, that it's the safest of the investments, doesn't mean that the capital flows that way. The capital rather flows in a way that any excess liquidity gets used to buy risk-on assets, with Bitcoin being one of them. This is even true on the micro, right? This is the COVID crash, a 54% decline for Bitcoin, and at the same time, the Nasdaq declined less, 27%. So both the moves to the downside, but also the moves to the upside are amplified for Bitcoin. This is a doubling, but at the same time, the Nasdaq only went up by 35%. My concern is that we haven't really seen what Bitcoin is capable of in the worst of time. The model predicting 44K, so the drop below the realized price. Or the model predicting 28K, the drop below the long-term holder realized price. They might not show the entire picture. There are fundamental shifts. For example, have a look at this. This is the number of wallets that own at least one Bitcoin. Never did this go sideways for such a long time. And it tends to only go up when Bitcoin's price is crashing. That's when some long-term holders buy the crash. If we don't see a crash in the Bitcoin price, then very likely the adoption won't grow either. My impression is that more and more capital is moving away from just on-chain holding, from the cypherpunks, from the people that want to have an alternative monetary system, to traditional finance. And traditional finance trades Bitcoin like a tech stock. This is a growing trend. Here is the number of Bitcoin that's held through the exchange traded funds, so through regular brokerage accounts. If people panic and they sell their Google stock, they sell their Amazon stock, they sell their Nvidia, they might also sell their Bitcoin at the same time. Because now the type of investor that holds Bitcoin also holds technology stocks, and that was less true in the past. In the past, Bitcoin was a true diversifier, not so anymore. And here is why that matters so much. This is again the Nasdaq 100. If you had just this chart, you would say that technology stocks are incredibly safe. Even if you bought at the wrong time, you just have to wait a few days, maybe a few weeks, until you get bailed out. Even if you bought over here at the end of 2021, you just have to wait for 2 years and you're getting your money back. That's a story that this chart would tell in isolation. Now, why am I showing this chart? I'm showing this chart because it starts at the beginning of 2009, when Bitcoin was created. At the bottom here, we see Bitcoin's price. Now, why doesn't it start in 2009? It's because even though the blockchain started in 2009, there were no financial transactions yet been made. The very first financial transaction was the purchase of a pizza. That was on the 22nd of May, 2010. So that was over here. That's the second vertical line. If you're getting value out of this content so far, then feel free to give this a like. You can also subscribe because I publish videos regularly. Of course, any support is very much appreciated. It will help the channel grow. In July of 2010, we've got our first real price data for Bitcoin. And so since then, long-term Bitcoin tended to appreciate. We all know about this chart. But here's the problem. We talked about the correlation between Bitcoin and technology stocks and how this correlation is increasing more and more over time, because now the holder that has Bitcoin tends to also hold other risk-on assets and doesn't really see Bitcoin as another form of gold. It's rather seen as a technology play. And if that is true, then this is a very scary outlook, because this tells us that all those models that we have and all those purchase opportunities below the realized price, they might not work when times get really tough, because let's zoom out a bit further. This is again the Nasdaq 100. By the way, the Nasdaq 100 here is shown as a ratio to the monetary base relative to US money supply. And what we've got over here, that's the dot-com crisis, where the Nasdaq underperformed the monetary base by 86%. What we've got over here, that's the global financial crisis, where the Nasdaq fell by 54%. This over here, this little dip, that's COVID. And again, Bitcoin fell during COVID by more than 60%. When Bitcoin is capable of falling 60% over here, what's going to happen if the current elevated prices are not sustained? What happens really if technology stocks are currently too expensive? If there's really going to be a pop of the AI bubble? What happens if Nvidia suddenly goes down by 60, 70, 80%? What happens to Bitcoin at that time? The answer is we truly do not know. I am not saying that we are going to see a .com 2.0, that tech stocks are going to fall by 86%. But even if they only fell by 50%, how much selling pressure would this put on Bitcoin? Would Bitcoin go down by 70, 80, or maybe even by 90 or 95%? How much could potentially blow up in the crypto ecosystem if volatility of Bitcoin is now much higher than everybody anticipates? We've never seen a tech correction of this magnitude during Bitcoin's lifetime. And at some point that might happen. And that will likely, due to correlation, bring us to crypto prices that are way below any system and any mathematical model that we currently have. We will be at 1 in the CBBI and we will stay at 1 and the price goes even lower while we stay at 1 and the price goes lower, etc. It seems like it's always a bargain, and we're falling through the 44k level, we're falling through the 28k level, and we're going to 20k, to 15k, to 10k. This is all potentially in the very worst case possible. Again, just because technology stocks have that much of an impact on the Bitcoin price discovery. And this connection between tech stock prices and crypto prices gets stronger and stronger over time. It's not just the ETFs that are holding Bitcoin. It's also all of those treasury companies. And the treasury companies, they try to acquire more and more BTC over time. But of course, they do have some leverage as well. And they use as much leverage as they can justify based on Bitcoin's history. But maybe Bitcoin's history is not representative of what could actually happen in the very worst case. And so it's very hard to say how this whole thing will unwind. If the Bitcoin maximalists are going to buy enough at 20k to turn this all around, or if then Binance goes bust, if MicroStrategy has to sell the Bitcoin, if everything goes very, very low. And then after 2 or 3 years of a bear market, we might then see another recovery. The Nasdaq 100 was in a 2.5-year direct bear market. If we include the subsequent recovery plus global financial crisis in that sample, we've got 8.5 years of a bear market. So the next decade could look very different compared to the last decade for Bitcoin. Now again, I made most of my money with Bitcoin and I try to be optimistic about the asset and I try to find the opportunities and I use decentralized finance. I try to beat the market with all kinds of strategies, but that doesn't mean that I'm not careful. I do believe it's very wise to be diversified outside of crypto as well. Even though crypto still is the fastest growing industry, this could turn around at any point. If the AI bubble doesn't continue and drags down prices in general, crypto will not be unaffected from that. It's not that easy to still find assets that are cheap, but having your own house, for example, where you're living is a first start, right? If you've accumulated enough wealth and you're still renting and you're considering, should I maybe diversify my crypto holdings, sell 10, 20, 30% of those holdings to buy my own house? Maybe it's not the worst of times to do so. Will this maximize future return? Who knows, but at least it will bring some safety into the whole setup. People are simply underestimating the risk that's in crypto. The current momentum is great, things are still going up, the music is playing, but Nvidia, for example, is already worth 20% of the entire US M2 money supply. Will it be worth more than the US money supply? Probably not. There will be a point where technology stocks have a harder time growing and where then profit will be taken. And this, at least at the beginning, will get amplified with more losses in crypto. If you got some value out of this video, feel free to give this a like. Feel free to also share this video with friends that might be interested in this. Also feel free, of course, to subscribe in case you haven't done so. See you next time here on YouTube, or potentially also see you in the premium membership. The link is down below with all the advantages you might get from premium. See you next time. Cheers.